Okay, what's up, everyone? Swinging Bull here with PB Alerts, and welcome to my earnings stream. And today we have two companies reporting earnings. The first company is ticker symbol MEI, and the name of the company is Methode Electronics. So they're in the electronic equipment and parts industry, if you will. And the other company reporting earnings is ticker symbol AZZ. So I guess you pronounce that as they're metals and mining company. So let's take a look at when they're going to be reporting. Give me one sec here. Okay, ticker symbol MEI is supposed to report at 4:05 p.m. Eastern, so about 5 more minutes for that. And the forecast revenue, $239 million for them. And their anchored VWAP around a little over $7 a share. They closed the regular session today at $10.28 a share, so down 1% on the day. Had a little bit of selling in the morning, starting to claw back some of those losses. And for going into the earnings, they had a negative EPS. They do pay a dividend, 5.4%. according to Webull, and they have a 33 million float. Income statement for MEI, they have negative net income. They did, let's take a look here. Yeah, they haven't pulled a positive net income in the past 5 quarters. On the annual basis, they were doing really well up until about a year ago. They used to have back-to-back profitable years. For some reason in 2024, they lost a bunch of money, negative 123 million. So a little concerning with this company. Let's take a look at the balance sheet. Debt to asset, 45%, so low debt to asset. They got 161 million in cash and equivalents going into the earnings. Or I'm sorry, the 103 million in cash and equivalents. That was as of February of this year. So we'll see what their earnings reaction is going to be, the stock price reaction to the earnings data. The other one is AZZ. They're already kind of getting some volatility here. So AZZ, again, they're in the metals and mining industry. And they had, let's see here, their PE was 18 coming in. EPS positive 1.78. They do pay a small dividend according to Webull. Only a 29 million float. And let's see what else we got here. They're supposed to report at 4:15 p.m., but they're already getting some volatility. They kind of ran into close there. They closed the regular session at $100.87 a share. Let me go to 1 minute chart on these. Actually, I'm going to pull it up over here on TradingView. I'll go 1 minute on that, and then 1 minute on this one. So AZZ already kind of moving a little bit. I don't think their data's out, but I'll definitely check for everybody. And their forecast EPS $1.62. I'm sorry, $1.58, and the forecast revenue 437 million. And their anchored VWAP just above $90 a share. But they closed the regular session $100.87, up 2% on the day. Like I said, they just kind of rallied into close a little bit going into the earnings. Let's go back to their financials. So yeah, I mean, AZZ out of the two is the better company for sure. They got 5 back-to-back profitable quarters on the annual basis. Positive net income just slowly going up. This is a good company. They're doing well. Balance sheet, okay, only 53% debt to asset. They are low on cash. Just something to keep note. Their financials look good. Other than that, I mean, like I said, on the income statement, positive net income on the annual basis looks really good. But as of February 28th this year, they only had 1.4 million in cash. So very low on cash for being a $100 stock, I have to say. But let's go back to the candlesticks here and see what's going on. So I think we're already getting a little bit of volatility. Trading views candles are kind of spotty. So maybe I'll just hang out on Webull for now. Go to 2-chart view. There we go. So I'll go 1-minute chart on both of these. And it's 4:05 p.m. Eastern. So according to Earnings Whispers, MEI, their data should be coming out any moment now. So just give me a second and we'll wait for that. So I'm going to put MEI on the left. There we go. And then I'll put AZZ on the right. Okay. Duco, I just read your comment in Discord. Pretty funny. Okay. So let me go to my other screen and see if any of this data is out yet. Again, AZZ is supposed to report at 4:15, so about another 9 more minutes on that. Let's take a look at MEI. See if we can get some data on that. I'm not seeing anything yet, so let's just give it a minute. Now, the expected move for MEI, again, MEI is trading, it closed the regular session just above $10. And their expected move is supposed to be around 13%. So you can do the math with that, but we'll see if they end up making a move like their expected move, right? Expected move for AZZ is around 6%. So, again, it's $100 stock. So maybe a $6 move up or a $6 move down. We'll see which way it goes. Sometimes we see double the expected move. Sometimes we see half the expected move, but it's a good guideline, I suppose, but just know that it's not exact. Okay, MEI's data should be out. Webull's printing some funky little candles here. Order book is almost empty on Webull. I'm sure there's orders there on other brokers. I'll maybe cross-check that with Fidelity or Vanguard or something, but let me just keep scrolling here. And okay, getting a little bit of a move on MEI is down 14%. Still, the data on the order book is still kind of non-existent. I'm going to pull up Fidelity on my other screen and just see what the order book is showing there. Because, I've noticed Webull level 2 doesn't really have all the orders. Let me just log in real quick. Hold on. And we'll find out what's going on with that. All right, here, let me do this. MEI. Okay. Do extended hours. Yeah, there's plenty of orders on here. There's 14 size 14 order at 905 on the bid. This is according to Fidelity. So that's a perfect example of don't always rely on Webull's order book. It's always missing orders. A lot of times I'll see a wide spread between the bid and the ask prices on Webull. For example, on this stock we're on now, MEI, Webull says the ask is 9.47 and the bid is 8.36. Well, Fidelity has shown me there's plenty of orders in between in that space there. Fidelity's got 5 orders at 9.12. It's got a few orders at 9.35. So you can see that the actual width of the spread between the bid and ask on Webull is just not accurate at all. So just want to point that out. You got to be careful with Webull's order book, okay? Especially if you're an order book trader. I always cross-check it with Fidelity or Vanguard, one of the more reputable brokers, maybe Schwab. Look at it on Thinkorswim or something, and you'll notice there is a big difference. Wow, yeah, Webull totally has this wrong. they're saying the ask is at $10, $9.93 now. Okay, it's getting a little, Weeble's getting a little tighter, but they were showing $10 on the ask, and Fidelity was showing me $9.15. So, yeah, just, I don't want to sound like a broken record, but just make sure you're verifying the data you're looking at. If you're getting it from Weeble, yeah, Cools on Discord says it's rigged. They're just not giving all the data, and it could be very misleading. You think there's some wide bid and ask spread. In all actuality, it's only like 0.05, 0.10 wide when you check the bigger brokers. So not really getting any movement, really. I mean, I know it's down 11%, but so it is down here. I mean, it closed at $10.28. The ask is at $9.30. So that's what someone's willing to sell it for. As far as Weeble is showing here, let me just double check and see what Fidelity is saying, and then I'll try and look for some EPS and revenue, because that's got to be out by now. Okay, yeah, Fidelity's spread is nice and tight on that. The bid versus the ask. It's at 9.05 to 9.15 on Fidelity. So, which is telling me that the value of the share price, it's low $9, right? Probably mid price on Fidelity is 9.10 right now. So that's the value of MEI. It's down in the after hours, sitting at 9.14, down 11%. So the price action on the 1 minute chart just looks very sloppy. Got these gaps here, printing like these little, I want to call them like a doji candle, but they're just like little speck marks, right? It's like not even a real candle. So pretty sloppy price action. It's trading on low volume. There was only 593,000 volume today. Now that is almost double the average volume over the past 3 months. Is right under 300,000. So yeah, it's double the average volume, but nonetheless, it's trading on low volume, or low volume, excuse me. And when that happens, you get the ugly, spotty price action like we're seeing here on MEI. TradingView probably even looks worse. Yeah, look at TradingView. It looks even worse on TradingView. So, so yeah, let me look on my other screen and see what we got. But nonetheless, looking at what the bid and the ask prices are, this stock is down. Okay, even though the price action looks ugly and it's low volume, the going price for the stock, according to Fidelity, mid price is around $9.10 a share. So it's definitely down. Okay, so let me just look at one more thing just real quick. Duco said Robinhood is cracked. Yeah. Okay, Pookie. Yeah, hey, that's a good word for it. The Morse candles, like Morse code, right? Yeah, maybe I'll call them the Morse candles. They're just like the little dash marks, right? Okay, let me go back over here so I don't get sidetracked. Okay, we got some data on MEI. Again, that's the name of the company is Methode Electronics. So electronic equipment and parts industry. All right. So there is something to do with like light emitting diodes and power distribution applications and stuff like that. So that's what they do. Net sales came in at 257.1 million. Okay. So it looks like they beat sales or revenue, because the forecast was only 239 million. So it came in at 257 million. So they beat sales revenue. They did take another net loss. Remember, we were talking about that earlier when we were looking at the income statement. If you go on the quarterly view, they've had 5 losing quarters in a row. They have not been a positive net income company, so obviously not profitable. And with the earnings they just released just now, once again, they lost money. They lost 28.3 million was their net loss. and which equates to $80 per share. I'm sorry, 80 cents per share loss. Adjusted net loss 27.4 million. Okay, that's pretty close to what the net was. Let's see here. Couple statements. Again, the price action is just kind of non-existent. However, it is the value of the stock in after hours is low $9, even though, like I said, the price action is real ugly. It's kind of, it kind of makes you think like it'll just jump right back up. But bid and ask on Fidelity, it's the value's around low $9 range, and that's where it's at. So it is technically down almost 12% in after hours. Just a couple of comments from the CEO, president and CEO, John DeGuynor. And he says, the method transformation journey made further progress in the quarter as we focused on improving execution to drive long-term value. We have built a new management team and set records for the quarter in the year in data center power product sales, with the year finishing at over 80 million. That's all fine and dandy. I feel like the CEO is just kind of throwing out like these fantastical sentences and kind of sugarcoating things. Yeah, that's great. Okay, you see the year finishing at 80 million, but you just lost 28 million last quarter. So yeah, it's great. He's given some projections on, looks like probably revenue, but I think the problem is, investors want to see this company pulling a profit, and this is going to be the 6th quarter in a row they have not pulled a profit, right? So, and it also looks like they're involved in the EV sector, so maybe that could be something, possible catalyst or something if they, do better in that area. But just a couple more notes here. We experienced a significant ramp down in expected demand. Okay, well, at least they're being truthful and forthcoming. So a significant ramp down in expected demand from one of their largest EV customers. So it looks like the stuff they make, they sell to like EV clients, other companies that are involved in EV. And they said they experienced a significant ramp down in demand from one of their largest EV customers and delays with EV customers. And then he goes on to say, in fact, we finished the year with a challenging exercise to write down inventory primarily related to materials for reduced, delayed, or canceled programs. Okay. All right. So good record keeping, right? So yeah, the CEO is not really saying anything to get investors excited. What's up, Lauren Mile on Kick? How you doing? Yeah, we just started streaming on Kick not too long ago. Yes, Lauren, I can see your chat for sure. And also welcome Tom on Kick as well, saying hello to everybody. So again, MEI, the earnings aren't anything fantastic or great. They lost money again, $28 million negative net income. CEOs making statements about their projections for the remainder of the fiscal year, all fine and dandy, but investors just aren't excited, and we're not really seeing any interest in this stock right now. Matter of fact, it's down 12.5% in after hours. So not too good with MEI. I think investors were hoping they would pull a profit this go around after not pulling a profit 5 quarters in a row. And lo and behold, here we go, 6th quarter in a row, negative net income. So that's the deal with MEI. I'm looking at AZZ over here, and it's getting some movement. It's trading just above where it closed at the regular session, but there was quite a bit of volatility there for a minute. Kind of wicked down to $98, then it wicked up to 105, then it kind of came back in the center here. So let's see what's going on with them. Let's see if we got some data for them. And let me just post a few things about MEI real quick. And at least the revenue and the EPS stuff, I'll post that on the bottom of my screen. Everyone can see that. Okay, there we go. All right, everyone should see that on the bottom of my screen. So just a little data on MEI, about 400 people tuning in between like 4 or 5 different platforms right now. So if anyone's here for MEI, there's EPS and revenue right on the bottom. Failed to impress investors, and they took another net loss this quarter. So let's look at AZZ. Had some volatility. Now it's sitting here in the middle, basically right where it closed at. It's sitting at 101 a share, closed at 100.93 a share for the regular session. So me going over to AZZ. All right. So AZZ earnings are out. Total sales came in at 422 million. Let me just cross-check that real quick. So they missed revenue. The forecast revenue was 437 million. So they just reported 422 million. So they missed revenue, all right? So not good so far. And out of that 422 million, let's go back to the sticks real quick. Out of that 422 million in sales, 187 million was from metal coatings. 234 million was for pre-coat metals. They did pull a profit, though. It's nice to see they pulled a profit. Their net income was positive 170 million. We were looking at the income statement earlier. So let's look at this 177 million. So yeah, that's pretty good. That's pretty good. So their net income has been going up over the past 5 years, and it's continuing to go up. So that's a nice trend to spot there. Net income 170.9 million. That's good for them. Let me keep going here. Okay. Revenue. Now, even though they missed on revenue forecasts, it's still up 2.1%. And debt reduction at 285 million. They did raise fiscal year 2026 guidance. So they did raise guidance. So maybe that'll give it a little push here soon. I think maybe investors are still maybe digesting the data a little bit. It is slightly green, almost up 1% in after hours after being up a little over 2% for the regular session. Excuse me, take a sip of water. All right, so still waiting for it to catch a bid, whether that's going to happen or not. But you know, they missed revenue, but they they raised guidance for 2026. So you know, I mean, there's some positives there, and their net income is up triple-digit percentage points. Also, the EPS is up 21.9%. Let's see if I can find some more stuff here. So just like I said, so they did beat EPS, though. I did want to clarify that. Their EPS came in at $1.78, and the forecast was $1.58. And that's up a little over 21% year over year. Same time last year, it was only $1.46. And again, just like we said earlier, they did miss revenue, came in at 422 million. The forecast was 434. So they didn't miss by much, but it's still up 2% year over year. And at the same time last year, their revenue was 413 million. So what's that, like $11 million increase on sales compared to the same time last year. So we got the data. Let me post some things here on the bottom of my screen for this. Just want to get the net income and the EPS posted on the bottom of my screen. Give me one sec here. Let me open up a notepad. So net income, 170 million. Miss. And then the EPS, $1.78, was a beat. There we go. All right, almost 4:30 here. I want to try and find a trade that I've been doing that I can share with everybody before I sign off here. Let me put that. All right, let's take a look what we can do here. Okay, so yeah, I just want to go over a trade here. I do have, I've been willing JetBlue, been willing it a lot actually. Over the past several years, I've willed it like over 10 times. Made a bunch of money off of it already, but I currently have 1,200 shares, and I got a cost basis in the low $4 range. And just I was talking about this in my stream yesterday about how I protect my downside a little bit, and it's through selling covered calls. Okay, so I'll show you my JetBlue position on my covered calls. Just give me 1 second so I can pull my screen over, and then I'll let everyone know what I did on it. Let me zoom in a little bit so everyone can see. Okay, so here's my Fidelity account here, one of my brokerage accounts. But I got 1,200 shares, low $4 cost basis. So what that means is, I wanted to protect my downside a little bit while I'm waiting for shares to appreciate. So I sold the $4.50 covered calls. Because I have 1,200 shares, I can open 12 covered call contracts. So basically, I'm writing the contracts and I'm selling the contracts to someone else who thinks, who's probably bullish on JetBlue. I mean, I'm just rinse and repeating the contracts. If JetBlue just wants to trade just above $4 for the next 3-4 months, fine. I'll just keep writing contracts. I'll eventually get my cost basis like down to like $3 or something, But what this did is I collected an average of $22 a contract on these covered calls. Again, I opened 12 of them. So that brought in $264.84 in premium and credit, right? So I get that on the onset of the trade, so I get to keep that no matter what. But as the trade is open and as we're getting closer to expiration, then you can see I could actually close this trade out right now for 50% of the credit. I could go ahead and capture half of it right now if I wanted to. I'm not going to close it though. Usually, when I'm selling covered calls to kind of protect my downside a little bit, I like to get at least 75% or more. I want to squeeze as much juice as I can out of this thing. And if they end up expiring worthless, that's a good thing. When we're selling covered calls, we want them to, I mean, it's even if they don't expire worthless, if the price of JetBlue goes above 450 and my shares get called away at 450, I'm okay with that too. I don't want to sound like it's one-sided here, because that's why I write contracts, because there's usually only two things that can happen. And out of those two possible scenarios, either the underlying stock is above my strike or below my strike, right? That's the only two things. And the good thing with being on the contract writing side is I don't care what scenario happens. If my shares get called away at 450, then so be it. It's still going to be a net profitable trade because my technical cost basis is well below $4.50. So the difference between my cost basis in the low $4 range to $4.50, if my shares get called away at 450, that's still profit to be had there on the trade. And then combine that with the credit I collected when I sold the covered contracts. That's another $264 just on the credit I received. So add that to what my technical cost basis is. Let's say it's $4.10, up to $4.50, then that's another 40 cents a share in profit, right? 40 cents a share in profit from a $4.10 cost basis to $4.50. If my shares get called away at $4.50, that's 40 cents a share. And don't forget, I have 1,200 shares. Okay, so that would be $480 profit plus the 264.84 that I collected when I sold the covered calls. So look at it this way, just on this one trade, if my shares get called away at $4.50 on JetBlue, I'm going to walk away with $744.84 around there. If we're taking consideration the little cost of commission or whatever. But so if I do get called away at 450, fine. I'll walk away with almost $750. Fine and dandy. That's great. Move on to the next trade. No problem. If JetBlue stays under $4.50 by July 18th, I'm also okay if that happens. All right. And let's just say JetBlue kind of just stays neutral, trade, bouncing around a little bit above $4, between $4 and $4.50, just kind of bouncing around in there as we approach July 18th. But nonetheless, it's below $4.50 by July 18th. Then that's fine. These covered calls will expire worthless, which is a good thing, because that means I will 100% pocket this $264.84 in premium. That goes right into my pocket as realized income, if you will, profit on the covered call side. And also the second layer to that is, since I received 0.22 per contract, which is $22 a contract, I can now take my current cost basis of JetBlue, and maybe I keep a little spreadsheet on the side, an Excel spreadsheet, and I'll go ahead and minus 0.22 off my current cost basis of my 1,200 shares. So not only did I pocket $264.84, but I simultaneously reduced my cost basis by 0.22 per share. Okay, so there's a couple moving parts going on here. So if JetBlue does stay below 450, that's fine. I'm okay with that scenario as well. And then I'll just do another round of covered calls. And that would be, I'll just go out. Usually my expiration dates when I open these is between 2 to 4 weeks. Really just depends where VIX is at, and volatility and stuff like that. But let's just go out 30 days and just make it, 30 days. You can see here the 450 calls are still selling for $30. I mean, the bid's at 24, the ask is at 31. The last sale today was $31. So I'll go off of that. And so what I'll do is, if JetBlue stays below 450, I'll pocket the $264 in profit on the covered call side, reduce my cost basis by 0.22, because that was the average per contract I had on these 12 contracts. And then I'll do another round of covered calls. And we just looked at the option chain. Those things are selling for $30. I'll just, $30. And again, I can sell 12 of them. 30 times 12. I'll bring in another $360 in income, and then I'll reduce my cost basis by another 0.30. Okay, so this is the types of trading that I do in the Discord over here. I run a ton of the wheel strategy. I always share my account with the members. I'm not hiding anything. I got skin in the game. I'm not just putting alerts out and not actually in them. I've seen that in some of these other Discords, like some of these analysts, like they're putting alerts out, and they'll even admit, they're like, I'm not in this one, but I like it. I don't like that. Not financial advice, but when I give my trades out in the Discord, I'm in the trade right with you. Okay, I got skin in the game. I think that definitely makes a difference, just with transparency and stuff like that. So anyways, let me just just wanted to go over that real quick before I ended the stream. Just this current trade I'm on JetBlue, and just kind of milking the income, see how many times I can rinse and repeat this before my shares get called. And then I'll just stack, $260 to $360 every time I do it. Maybe I can get away with doing it 3 or 4 times. You get the picture. The profit accumulated starts really adding up. Before you know it, you're up a few $1,000s on the trade when your shares get called away. So that's kind of a great situation to be in. But yeah, let me take a quick peek at the candlesticks again. So MEI, negative reaction. They were unable to pull a positive net income. This is the 6th quarter in a row that they've had negative net income. Not even quite sure why they're trading up here around $9-10, but they can't seem to pull a profit, and I think investors are their patience is kind of wearing thin a little bit. They need to do something to get the interest up with investors again. So I'll put that data there. Oh, look, I can share it via Kick as well. And then AZZ, the thing with them, they beat EPS, but they missed revenue. So kind of a mixed bag there. And again, investors just aren't excited. It's basically sitting flat. It's trading at $101 in after hours after it closed the regular session at $100.93. So just not much going on. It was kind of a slow earnings week. Tomorrow should be a little bit better. When we do the earnings tomorrow, we got Levi is reporting tomorrow. So that should be interesting to see. Levi's still very much in business, and also reporting is WD-40. Everyone knows that. So tomorrow I'm going to do Levi and WD-40. Maybe we'll have some more action tomorrow. But yeah, with that said, this is the Swinging Bull with PV Alerts. If you're looking for a new trading community, definitely check us out. There's some links in the description. We got something for everyone. I mainly do the options. I write a lot of contracts. I run a lot of the wheel. I do a lot of spreads, that kind of thing. And we have other coaches that do other things like swing trading and stuff like that, just with stock and stuff. But yeah, if you're looking for a new home, feel free to check us out. If you do end up joining, tag me in the chat. I'll come by and say hello, and then we can go from there. But yeah, I hope everyone enjoyed the stream. I hope everyone has a great night, and I'll see everybody in the next video. Cheers.